Welcome back to my YouTube channel, particularly to Company Corner. Today I am going to discuss about GMM Pfaudler. This MNC company was in limelight and has given fantastic returns to investors in many years. Recently, the Pfaudler Inc. sold some of its stake in the market, and then the market has given a bidding of around 15% to this stock. So now, should we exit this stock? Should we hold it, or should we make an entry to this stock? So before understanding that, let us understand this purpose of this video is purely educational. Investing in the stock market is risky, and before investing, please do consult your investment advisor or do your own research. The purpose over here is purely educational and to cultivate and to bring a habit of analysis in the viewers. So let's get going. GMM Pfaudler. When you look at GMM Pfaudler manufactures corrosion resistant glass lined equipments, and in this particular market segment they do have leadership position in the market. It is a leading supplier of process equipment to the pharmaceutical and chemical industries. Over the years, Pfaudler has diversified its product portfolio to including mixing systems, filtration and drying equipments, engineered systems, and heavy engineering equipments. It has over 50% market share in this segment. When you look at the fundamentals, the ROE is 16.1%. Normally, I will not consider a company less than 15% ROE, return on equity. So from that perspective, disqualified there. FI holding is about 11.7%, and recently FI has increased its holding by 11%. Sales growth over 3 years is 71%, 5 years 48%. Profit growth also is 16 and 22% in 3 and 5 years. So very exciting position in terms of profitability this company had. When you look at the free cash flow for 3 years is positive 178 crores, and for 5 years it is also positive 236 crores. So based on these basic selection criteria, this company appears to be a good company to hold in your portfolio. Let us look at this company's performance over the years. If you look at the price performance, and this company started getting notices starting 2015, and that time it was available at about 70 bucks. Today it has receded to 1500 from a peak of around 1900 and all-time high of around 2000 plus actually. So at last almost 2 years, the movement are primarily sideways. So after having a very steep rise here, the company is moving sideways. Now the question comes, should we enter this stock? Should we hold or should we sell and exit out? Since the Pfaudler Inc., a promoter from US, has sold its stake in an open market, in a block deal. So for answering that question, let us dive deep into the analysis and then we will take a call what to do with this stock. GMM Pfaudler. I did this analysis yesterday. Yesterday I could not record this due to my preoccupation. When you look at the EPS growth over the years, in 10 years, the EPS has skyrocketed. This means the company has been consistently increasing its earning over the years. When you talk about OPM, last 2 years, during Corona time, OPM did see some sort of pressure, and sales also has been growing. So the EPS growth is primarily driven by initially rising OPM and sales, and last 2 years due to heavy increase in sales. As I mentioned earlier, the company is having a leadership position in the segment. It is having around 50% plus market share in the segment it operates. When you look at the cash flow from operations and cash flow from investing activity, if you sum it up, it is positive all the years except 1 year. So even from free cash flow criteria, this is a good company to look at. When you look at the ratios, different inventory ratios and working capital ratio, the working capital days, let's look at, it has moved from 90 days to 53 days, and during COVID period it has gone up again. It is 53 days in the year ending March 22. So company has done a reasonable job in this area in controlling uh, working capital and performing better with that one. When you look at the peer comparison, like which are the other companies, here other companies which is listed here like Hindustan Aeronautics, Thermax, Bharat Dynamics, Praj Industries, they all are in manufacturing but different sort of segments. They are not exactly replica of this company, but well, still, when you compare the ROE 16.1 here, this company compares in this list, this is not the highest. Similarly, OPM, again, it is not the highest. NPM, it is quite low. And sales growth is the best in the list. Profit growth is almost second best. Sales growth in 3 years also is highest, and profit growth in 3 years is sort of third, fourth actually in this one. So when you compare, as I mentioned to you, this is not exactly the sort of competition or peer which can be compared, but companies consistent cash flow, long-term growth, opportunity, those are fantastic, and company appears to be on a verge of getting a lot of leverage. When you look at the increase here, look, it has a peak of around 2068 and today it is available as 1517. Yesterday it was 1534, so about 26% discount over the peak. And the just previous high was around 2000. So from both the perspective, it is significantly discounted. So let us go and see the attractiveness of the company in terms of when you look at the P and PB, does it make sense to enter this company? So when you look at the PE and take the P ratio for 5 years, you will see it is well below the median, which is about 59.3, and today the PE over here is 42 or 43. So it is quite below 5 years median PE. Similarly, it is quite below even 3 years median PE and 1 year median PE. So when you look at the PV ratio, price to book, again 5 years it is lower than the median, 3 years is quite low than the median, and even 1 year it is quite low than the median. So the company appears to be in a good valuation zone. So when you look at the valuation both from PE and PV perspective, the company is in a very good investment zone, both on 5 years, 3 years and 1 year, and so is the case with the price book. So what should we be doing? What about then why the promoter is selling? Now this promoter, their investment in India was governed by one of the PE, and PE normally they would like to leverage the market and normally they want to get out of the market. So that could be the reason. So let us look at the reactions. It is very important to understand the promoter has sold. Who has bought it? Has it gone to the hand where the future of the company is not assured? So let us look that particular perspective. So as I mentioned earlier, on all the parameters P and PB, this is attractive. So it appears to attractive price, and this type of price you get only when there is some bad news or some news like this, when promoter sell the holding or something else happens. So therefore, if one is confident about this company's future, then this could be a very good time to enter and buy. And this is available at 26% discount compared to the all-time high and about 25% discount compared to the previous high. So when you look at the deeper analysis, GMM Pfaudler announced stake sale by Pfaudler Inc. controlled by DBAG Fund 6 and private equity fund DBAG. Because this was controlled by this private equity and they want to make profit and get exit at some point in time. Controlled by DBAG, the private equity fund has sold so much shares amounting about 17.3% stake in the company through a bulk deal at 1700 rupees per share. And after this news, the price came to about 50 and now it is 15. So you are getting almost 200 rupees lesser than the deal which happened. Point number one. Who bought it? Now this company, this all shares were bought by different mutual fund and the domestic investors, large investors like Axis Mutual Fund and quite a few other mutual fund list. When you look at it, I have not put that list here, but all the institutional investors have bought this particular stake. So that is very positive. When you look at the other promoter, Patel family, because it's a JV between Pfaudler Inc. and Patel family, has become the single largest promoter shareholder in the company. Patel family has entered into an arrangement to purchase 4,50,000 equity shares at 1% from Pfaudler Inc. at 17,000. So now the largest promoter is Patel and family, and they have already got an arrangement to buy another 1% from Pfaudler Inc. at 1700 rupees. And you are getting that 200 rupees, almost 200 rupees lesser. Now, the promoter, the second promoter, unless he has a good confidence about future, he will never ever do it. Secondly, whatever Pfaudler has sold, it has been bought by the other institutional buyers. So looking at all these development, what one can conclude is this could be a good company to make an entry. So Pfaudler Inc. has sold to different mutual funds and domestic investors, institutional investor, DIIs, and also Patel family, who is the second investor with whom Pfaudler Inc. has a joint venture. They have got into an agreement with Pfaudler Inc. to acquire additional 1% at 1700. So friends, this type of opportunity we don't get every day. Good companies rarely trades at a discount to its median, and they trade at a discount only when you have news like this or other news. So since the background is good, future is good, leadership position is good, you should look at these companies at this point and jump and acquire the stake. So if you are holding it, you may like to add some more shares if you have bought it earlier to average out. If you are not having this share, and depending on your risk appetite, maybe you may like to acquire some shares in GMM Pfaudler. And if you are willing to wait for some time, let's say 2 years time perspective, I'm very sure you will take home 25-30% positively. So friends, I hope you like this video. If you like the video, please feel free to circulate this video amongst your social groups, including WhatsApp, Facebook, Instagram, etc. And don't forget to give a 5-star rating to this video. Like this video, put your comment. Your comment goes a long way in building a channel which is just coming up. Thank you so much for your time and see you next time.